Let's focus in on an interesting voice then from the markets, and joining in right now on the show we have Kunal Kapoor. He's CEO of Morningstar Inc. And Kunal, great to have you with us right here in our studios. We have lots to chat about with you, including your favorite books as well as your quotes. But first up, let's chat markets. Given the current juncture at which we're currently perched at, the liquidity situation, we have seen the domestic institutional investors also take a lot of interest in the markets right now. How are you looking at the Indian markets vis-a-vis our global peers?
Yeah. Well, I think the Indian markets in many ways reflect what you're seeing globally as well, where we've gone through a strong period of outperformance. And whenever you see so many years of strong outperformance, I think it's fairly reasonable to start being a little bit cautious. And so I don't think there's any warning or danger signs out there, but it is worth, I think, tamping down expectations, because the reality is that the returns of maybe the past decade globally are unlikely to be repeated in the next decade. That doesn't mean there won't be pockets of opportunity, but I think in aggregate you have to be more choosy than you've probably been in the past decade.
So why would you say that, considering things are at the peak when it comes to at least US?
Right.
Just last night we've had Fed play on expected lines. It's a 25 bips hike. The dot plot is talking about 3 more hikes in 2018. No surprise coming in there. It's the best that you could ask for in terms of the unemployment rates at a 17-year low and inflation under control and all of that and more.
That's right.
Then do you think this is a case of valuations being at the
I think it's valuations. I think markets are efficient. They tend to price things in well in advance. And so when you look at where we are today, I think it's very, very likely that the markets have priced in a pretty good scenario in most markets. And valuations are at, maybe not historical highs, but they're certainly not cheap. And so, we're big believers in valuation at Morningstar. And so when we look at valuations globally, it's hard to get very, very excited about what the future might hold. So again, I would say that there's no big danger signs, but I don't think you're going to kind of get the returns that you have this year globally, where pretty much every asset class is doing well, pretty much every stock market is doing well. That's just not going to happen,
and
I think, again next year.
And there are frenzies like Bitcoin as well building up.
Well, there's that too.
Yeah, but aside of that, India is a very different story in that sense, because while you do have valuations at an all-time peak, you don't have a very stable set of macros. Earnings are still maybe a quarter or two away, who knows. And at the same time, the growth is looking a little bit challenging because there is that pressure on IIP, inflation is on an uptick, and crude is not on your side right now. But again, do you think we're at the same juxtapose, because it's a game of valuation eventually?
Yeah, I mean, I think, if you look at one of the things that excites people about India today, it's that it's suddenly been discovered. There's a lot more in terms of flows. I would argue the opposite, though, is when you really would have wanted to invest is when it was not as well discovered, right? So it's before all of that starts to happen. I think one of the biggest benefits that India has relative to even the past 2 decades is that you do have a majority government. And so I think decision-making is probably a lot faster than it's been historically, and I view that as a plus. I think if you talk to most experts, they'll tell you that GST is going to be a good thing for India. So there's a lot of good things underpinning the story. I wouldn't worry too much about the short term. I think India over 5-10 years is likely going to be attractive.
Let's talk about, you brought up danger signs, and I couldn't help but thinking about the pharmaceutical space. But do you think that now perhaps some of the worries when it comes to the US FDA concerns are behind it? How are you looking at the overall valuation game in the healthcare space?
Yeah. So if you look across healthcare, you see actually lots of pockets of underperformance. So it's no surprise that when I look at the coverage list of our analysts, healthcare is one area where they're finding more opportunities for the next 3 to 5 years. So obviously you have very specific company issues that you're referring to when you talk about FDA issues and things like that. I think, but in aggregate, those types of events tend to basically cascade across the sector and take down good names with bad names. And so certainly if you look at healthcare, I would argue that probably it's in a better position to outperform relative to other asset classes, other sectors at least, that maybe have done a lot better over the past 3 to 5 years.
The other one, and this is a very interesting note that you've talked about, a contra call, and that too on select energy stocks. Why is that? Because again, they're the hated, undiscovered.
That's what stories. I like hated and undiscovered, because once they're discovered, then the chances for outperformance are a lot lower. I think just globally, if you look at energy firms, they've learned to be a lot more efficient than they've ever had to be, because oil prices and gas prices have been lower than for a much longer period than most people would have expected. So I think even just small upticks in price tend to be positive. You've seen a lot of consolidation. And so I think you still have very secure dividends in many of those names. And so when I look at the coverage list again here, while our analysts wouldn't say that they're all screaming buys, I think selectively you do have some really nice opportunity in oil and gas in general.
And you're
You mean
clearly
the private players or the state-owned?
I would say it's name by name, and so it depends country by country what you're looking at.
No, I'm talking about India.
Yeah, there's nothing specific right now that I would point to, but as a sector, I think you could also invest through an ETF, for example, and just kind of get broader sector exposure if that's what you're looking for.
You're clearly playing by that quote that you like, Warren Buffett's, be fearful when others are greedy and greedy when others are fearful.
That's right.
That's a quote that you abide by, is it?
I mean, this is a time when very few people are fearful.
Right.
And I see a lot of complacency. You mentioned Bitcoin as an
Yes.
example. So, I think you want to have a plan. You want to keep investing systematically. But, I think there's always a tendency when things have been good for as long as they've been for people to want to jump in at precisely the wrong time. And so I'd be thoughtful and cautious if you're thinking about investing. Do it for the long run. Do it as part of a plan, but don't just do it because you've heard that your neighbor is making money.
Yeah, because everyone's doing it.
Yeah, once everyone's doing it, then you know it's over.
The fear of missing out.
But
That's
is
right.
that the sense that you're getting about Bitcoin? I mean, what is it telling you about the market psychology? Are we reaching that tipping point of exuberance and frenzy?
I'm not going to spend too much time on Bitcoin because
No,
I'm
not
really
Bitcoin.
not.
I'm just talking about.
I don't think the markets are reaching a point of exuberance and frenzy. I just think the valuations are not as compelling as they were. And so, when you look at our forecast globally, you see that our analysts and researchers are thinking that you'll get low to mid-single-digit returns in equities over the next decade. And that's consistent with what a lot of historical trends would tell you if you believe in reversion to the mean, which I do. And so it's not a case of anything being out of whack, just I think a case of expectations needing to be tamped down.
So 2018, which is that one asset class which is going to give you bigger returns?
Well, I think if you look at stocks versus bonds, which is what most people think about, I still think stocks will probably be a better asset class to hold. So I think if you're doing it thoughtfully with the right intentions, you're fine. But if you're doing it because you've had 15, 20, 25% returns this year, I don't think you're going to have that again next year.
Kunal, while you're talking about healthcare or energy as well as a contra bet, which are the sectors that you would steer clear from, or the kinds of companies that you would advise investors not, burn their fingers with?
Yeah, I think there's no one sector that has run out in front in a meaningful way that I would say watch out. I think what you want to do is you want to be thoughtful about the individual names that you're looking at. And generally, as a bull market gets longer in the tooth, more suspect companies start to do better. And ultimately, stock prices reflect business value. And so I think you want to own good businesses that you have an understanding of, that you can buy at reasonable prices. I think if you do that, even if you have downturns or periods where there's underperformance, you're usually okay over 5, 10, 15 years. And that's what investing is about. I know a lot of people struggle with that concept, but that's really the reality of investing. It's a long-term game.
It is.
And just, before we let you go, how have you read into the moves taken by the Reserve Bank of India, and, given that Aisha flagged up as well some of the concerns on inflation, IIP, etc., what's your view?
Yeah, I mean, I think if you look at the way global banks, global government banks have basically operated in the past decade, I think they've been very well coordinated. Whether you're looking at the RBI here or the Fed, they've done a good job. And I think one of the reasons India has done well is because generally, while inflation has not disappeared, it's been under control. So while there are some signs that maybe it's picked up, I don't think they are flashing red by any means. And I wouldn't put that on the top of my list of concerns when it comes to India.
Okay, Kunal, great speaking with you.
Yeah, thanks for having me. I appreciate it.
Thanks for
joining it today. And in case we don't see you again, here's wishing you a happy new year
Thanks.
already
Same
from
to
all
you.
of us. Thanks.